I'm LaDonna Lockard, and this is Max Convos. I'm here today with Jeff Tesch, the CEO of RCN Capital. Jeff, you have to be one of the most beloved industry figures out there. I kid you not. I have watched even as your competitors talk about you in such favorable ways. You truly are beloved. So thank you so much for being here. I had a chance to connect with you recently at the New England Mortgage Expo. It was great to sit with you there. We had such a great time chatting. We decided to take it over to my side of things. So thank you. Thank you so much for being here.
LaDonna, it is great to be on your program. Good to see you again.
Good to see you. Good to see you. Well, let's go ahead. Let's jump into it. I want to know, we talked a bit about DSCR when I sat down with you, but I would really love to know how you've seen the private lending space change over the last couple of years. What have you kind of seen? What have the trends been?
Yeah, it's interesting, right? So as the mortgage market has struggled with the rise in interest rates, often making the single-family home unaffordable to most conventional buyers, there's been a pool of investors that have continued to operate in the space, basically taking properties that may or may not be livable, fixing them, and then renting them out. And typically when these properties come onto the market, they need a mortgage for the long term. And that's where the DSCR, or debt service coverage ratio, loan comes into play. And LaDonna, the cool thing about this program is the customer is a business purpose customer. So they are being underwritten on the value of the home and what they're going to be able to rent it out for, which is very different than the traditional homeowner that is having to meet certain benchmarks to be able to qualify for the longer term product on income, et cetera, et cetera. What we have noticed over the last few years is the demand for single family rentals in the United States has not slowed down at all. And investors continue to be bringing product to marketplace and allowing independent mortgage brokers all over the country to not only source these customers, but make them their long-term partners and hopefully build their businesses.
I have two questions to go along with that. One, what would you say to people, MLOs, who haven't dabbled in the private sector? What would you say to them to get them to actually turn on and decide now is the time for them to explore these as another product offering?
Sure. So what I would say is, when you think about the product that you as an originator, right, whether you're an independent broker or a licensed professional working for any sort of independent bank or wherever you are, think about the non-owner occupied property, not all that different than the owner occupied property. You are the expert in that field. You know those homes inside and out. You know your local marketplace. You know what the homes are worth. The only thing that's different is how we underwrite these loans. Where instead of underwriting the customer as to whether they're going to be able to afford the home over a long period, we're underwriting the home as to whether or not the home is going to be able to service the debt from a rental capacity over the long period. Everything else is the same. And I'll tell you, folks that have made that transition or added this product to their mix have had a great deal of success with that.
Yeah, we've definitely seen that over the last couple of years. I know that we mentioned in our conversation how much these types of loans really have kept the mortgage industry going over the last year or so. With that kind of second part to that question, what advice would you say MLO should be providing to their clients, maybe as new coming investors want to start exploring these options? What is kind of a pitfall that they should be warning them about? What do you think they can do to better leverage and assist their customers, their investors?
Sure. So once again, when we think about a DSCR loan, it really is what it says: debt service coverage ratio. Basically what that means is we need to know what is the mortgage, what's the insurance, what's the taxes. We bundle all those three in, we come up with a number, and that is what the house is worth as compared to the rent, right? So for example, the customer buys the house for $100,000 and the house rents out for $1,250 a month, that would be a debt covered service ratio of about 1,250, assuming that the $1,000 a month included the tax, the insurance, and the mortgage payment. That is the key to the entire product. It's really not any more complicated to that. Now, some of the pitfalls are you want to make sure that your customers have reserve for repairs, right?
Mm-hmm.
So not unlike a homeowner, things happen, things break. So when you're working with a lender, they're going to have certain contingencies on available equity, available cash for them to be able to have reserves for those repairs. But other than that, it's all about, will the house support the debt for the long term?
Speaking of long term, where do you see things going over the next couple of years? I know, again, we're kind of breaking out that crystal ball to see, but what do you see happening in the private space over the next few years?
Yeah, on the private side of things, where we just live in the commercial world, even though we're lending on the homes that most of your listeners are familiar with, we see a continued appetite of non-owner occupied. And there's a lot of things that are going on. You know, LaDonna, we had a reset during COVID. Folks don't necessarily want to live in the same home for the next 10, 20, 30 years. And that's okay. And that's where renting has really become a big part of the family story. We see the ability of families to rent, live there for an extended period of time, maybe change geographies, is going to be an ongoing solution for families across the United States. We don't see this slowing up anytime soon, LaDonna.
I have to agree with you completely. Well, that is it. That is our portion for Max Convos, but we have so much more that we need to talk about. So we're actually going to take this over. We're going to go do a Take It to the Max. Thank you so much for joining me here. And for anyone interested, make sure to find us on Take It to the Max. I'm LaDonna Lockard, and this is Max Convos.
For more on these and all of today's top stories, go to nationalmortgageprofessional.com.